The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 27th magnificent Monday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend. Let's make sure we have a great day, and the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 exchange, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets, what the bulls and the bears, what the buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call on in. Now is not too early. 877-927-6648. Of course, internationally, you can reach us at 727-445-1044. So let's go ahead and get this show started on Magnificent and Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down about 242 points. She's printing out at 17,157. S&P down 34 points, trading out at 2,002. NASDAQ Composite off about 100 points, trading at 4608. Russell 2000 down nearly 30, trading at 1098. Gold is kind of unchanged, up $2, 1324. Silver's unchanged, down 3 pennies at 1775. Light sweet crude back $1.50, trading out at 4615. Leading the charge here to the upside. I don't know what that Hardware International, that must be an IPO or something. Public Storage, though, that's not an IPO. It's up $8, 3.5%. You've got GW Pharmaceuticals up $8. Suffolk Bank up 27%. Interesting. Tyler Technologies up about $4, a little over 2.5% out there. To the downside, Priceline off $51, BlackRock back 12, Intuitive Surgical off 11, Acuity Brands down 11, Ryanair Holdings down about $11. So we've got enough to look at to the upside and to the downside. But where do you want to begin? Of course, you can send me an email, steve@tfnn.com. I'll do my best to, check my emails to be able to get to those questions inside the den. Please go ahead and post anything that you want me to take a look at. I think that the place to start, I mentioned the U.S. markets. I didn't mention the DAX closing down 288 points and the FTSE closing down 156 points. So let's do this. Let's kind of take a step back for a moment. Let's go take a look at the international markets, because I think as one of our elements, I think that's one of the things that we want to do. Let me pull up the FTSE. Let's go look at it using a couple of different time frames and different tools out here. So if you're watching us on TigerTV, you're looking at a black background chart. That's the chart that's coming from my e-signal system. So we're going to be using both and flipping back in between the Ninja Trader system and the e-signal system. It's a daily chart that's up on the screen right now, but let me put the longer term view, the monthly up on my screen out here for you. So now we've got the monthly chart that shows up on the screen. We can see that the green line on the bottom, that is the trend line that is in effect right now. The trend line that failed, this is going back to the 2009 lows, the trend line that failed is the red one. So we can see how price really blew through that area back in June of 2015 and never looked back. This is the FTSE, the FTSE 100, I believe, in the UK. So we're using that as the primary exchange in order to identify what's going over in the United Kingdom. Now, that's the monthly chart. That's why when these lines show up on my chart, you'll get a feel on the daily chart. You'll get a feel of where we're at inside the FTSE. Now, what is it that we also know about the FTSE, and as well as our markets out here, is that in the case of the FTSE, let's just take a look at what we know right now. And that is that the low that came in, and this is the low that came in that set up the new longer-term trend line to be paying attention to, February 11th out here. That's when the FTSE was printing out. That low, by the way, was magic number, 5499.51. So from that low to the hammer candle, all right, if you were with us on last Friday, you caught the segment with Steve Nissen. We talked about hammer candles. They are important, especially at the completion of a pattern, which in fact the FTSE was doing. As the FTSE made its low back on June 16th, you had an A to B equals CD to the downside. You had a seventh wave move to the downside. You had everything. And of course, the FTSE bounced up nicely from that level. Of course, that level was taken out or tested is really all that we know at this stage. That hammer candle is the first place that you want to pay attention to with regard to the market, the continued market movement inside of the FTSE. Because at this stage here, volume aside, just simply we have a test of support that is held. Huge bar, no question, on Friday out here. Nonetheless, you saw price close above that hammer candle. So the hammer candle still in effect today. Now, the bottom of that, the number you're going to pay attention to, if I didn't already say it, 5899.97. If we get a close below that level, not a test below it, but a close below that level, really two things ought to happen. Number one, the first thing that ought to happen is you all go down and test, not you all, but price ought to go down and test the low of Friday. But more likely than not, price ought to come back and test that little rising trend line out here. Likewise, price can, tomorrow, overnight, whatever, price can turn on a dime out here. But at this stage of the game, more likely than not, you're coming down with another wide range. Now, the top of that hammer candle was tested today, too. And I don't have volumes behind this, so I don't know if that swing point was tested with volume, without volume out here. But you want to be paying, my opinion is you want to be paying attention to the FTSE in order to be able to get your next clue as to what the markets are going to. We're going to take a look at intraday, what markets are trying to do with regard to the bounce out here, but and what we want to pay attention to. But we'll want to pay attention to the FTSE. Now, that's one chart. If I take a look at, where did I put it? Let's take a look at some longer term. Let's go take a look at that's the FTSE using three different time frames out here. And the three different time frames we have, the left-hand panel, I hope you're watching this on TigerTV. Left-hand panel is the monthly chart for the FTSE. The center panel is the weekly chart for the FTSE. And the right-hand panel is the daily. Now, you're going to see red, green, and blue lines out here. Each of those are identifying horizontal trading range boundary lines. When you see the thick dashed lines out there, those are the levels that have the largest number of opens and closes occurring at just about that price level. Don't use it to the penny out here, but it's really close to that level. And what does that mean? Those are the really strong levels of support or resistance. Now, in the case of the monthly chart out here, where price came down, tagged it on Friday, we can see, because we're in the month here of June, we can see that price came down and tested that, and that's an area that rejected price thus far. However, if we see a close below that, a hammer candle, we know there was a trend line out there to be paying attention to. I would say that the FTSE would go and test that 58.83.84. That's like also saying that it should go test the low of the session from Friday out here. The way I would look at it is if the FTSE is able to hold 58.83, that might be the end of the move at this point in time. Some type of bounce may be up to the midpoint, that 63.18 level. The weekly, now the reason why these horizontal trading range boundary lines are different on a monthly than a weekly than a daily are because the candle, this is all based on the body of a candle, the essence of price out there. And a monthly close is typically going to be different than the weekly close, which is typically different than the daily close. But everything centered around the 58.60 level to 58.83. That's the price point we want to be paying attention to. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Quick question that I'll answer that came into the den. We're going to spend some more time on it. Then I want to go back I want to take a look at the currency pair. I want to take a look at the Great British Pound. And then we'll take a look at what the New York Stock Exchange is doing just to try to put all this together. So we're taking a look at things on different time frames because the market is certainly giving us clues. But the question inside the den was, I'd like to ask you if the support level on the ES of 1999 is still valid. Now, we were taking a look at the monthly, weekly, and daily horizontal trading range boundary lines. These are the horizontal levels of support and resistance. Remember, we're kind of like Jack Sparrow, or we're like the Pirates of the Caribbean, and we use these numbers as guidelines, not necessarily as exact numbers out here. But as we take a look, so this data here in the ES is going back, I don't know, to the 1994, 1995 timeframe. So we're using quite a bit of data out here. And we can see that the monthly horizontal trading range, we're still in the month, but the number to be watching here is about the 2015, 16, 14 level. That is a horizontal, the trading range boundary line of price of the ES by the end of the week. I think the end of the week, Friday, maybe. Is that the last trading day? Today's the 27th. I don't know. I won't think about it through my head out here, but somebody will let me know for sure. You'll know. But watch the 2016 level. If that area holds, that's a positive for the markets. At the 2000 level, which is really close to the 1999, that was asked about. That happens to be a weekly horizontal trading range number. So I'd say, to answer the question here, watch this at the end of the week, the 2000, the 1999 area. Intraday today, we saw the ES mini get down to 1982. Get down maybe just a tad below that, but you can see that happens to be, and this is on the right-hand side of my chart out here, that happens to be a daily horizontal trading range. So that says that the ES mini ought to find support right about where we're at. you guys support on the monthly, support on the weekly, and certainly you hit the number almost to the T out here inside of the daily chart. What happens if price goes lower? Well, price goes lower. In the case of the monthly chart, says you could be looking at 1864. The weekly chart says 1883. The daily chart says 1932 would be next. But at this stage here, it's given us a signal that it's trying to find at least a short-term bottom out here. Now, it's not going to find a bottom if the FTSE continues to fall to the downside. Just likely not going to happen out here. And if the FTSE is going to find any kind of footing out here, then that means that the Great British Pound likely also has to find a footing as well. So if we take a look at the horizontal trading range boundary lines inside of the Great British Pound, and this is a really wonderful tool. It's especially wonderful when you have volatility in days like Friday. Especially days like Friday, because you try to say, okay, where were you headed to? Where are you headed to out here? And it's a tool that not too many folks use out here. If we take a look at the Great British Pound, go over on the left-hand panel out here, you're going to see that 130, 1.3066, almost sounds devilish out there, and we got down pretty close to that. That happens to be, this is a long-term chart. This goes back to 1984, 85, something like that. All right. If I go ahead and I blow it up like this, so we're taking data all the way back to 1984. What we can see out here is that is a horizontal trading range boundary line. It hasn't been tested that often, but it is on a monthly basis. That should be support. What happens if that level fails? That says prices will go lower. To what area? The first area would be looking at is 1.244. The next area would be 118.27 out here. But at this stage, the Great British Pound on a monthly chart here has found some support. Now, on the weekly chart, the green line out here, it's just hit the midpoint. Those little dashed lines that you see in between the solid lines on my chart, those happen to be the midway point in between these horizontal trading range areas out here. Now, oftentimes, a midpoint can be a spot where you'll go ahead and see price either find support or resistance. In this case here on the weekly chart in the Great British Pound, it has found, and it's trading on it right at, truly right on the number as we speak right now. So this 132.11 area is very important. On the daily chart as well, we can see that it too got down to a midpoint range. What would be my take on it? My take at this stage here is just simply watching those midpoint levels, because if those midpoint levels fall, so we're certainly going to see 1.306. We're most likely going to see an intraday spike at least down to 1.265 and to 1.283 out there inside the Great British Pound. If that happens, is it likely that the FTSE will move lower? And I would say the predominant answer ought to be yes. That is likely the scenario. Now, the markets have achieved, by markets I'm going to go ahead and use the New York Stock Exchange, has achieved oversold status. That being said, oversold status just means that condition needs to be worked off. Does not mean that it stops right here, right now. So we're going to look at intraday charts. Now, how is it that Stevie can say that? Well, inside of the New York Stock Exchange, the best tool that we use to identify overbought and oversold levels is take a look at our advanced decline oscillator, also known as the McClellan oscillator, created by Sherman and, what's his wife's name? Miriam. She's passed away, but Miriam McClellan out here. Now, when this oscillator reading gets to positive 150 or higher, you start to get to overbought. When it gets to minus 150 or lower, you get to the oversold reading. If we take a look at, we just take a tour out here. We come back to June 14th. The market didn't actually bottom on June 14th. It was 2 days later, and then you had that nice bounce. It was doing what? It had gotten down into that oversold level. If you come back a little bit further into the May 19th level, May 19th actually saw a close of minus 203. Below minus 150. Today you're at minus 166 out here. What did the market do? The market went ahead and bounced. What happened back here at the February lows? February lows got down to minus 136. Didn't get all the way down to 150, but again, identified a oversold condition out here. It does just to get down below 150 doesn't mean you're going to turn. You've got to go and take a look at some other charts and other tools out here to figure out if the market truly is trying to turn. But in today's day, specifically with regard to today, what makes today more unique than other days out there is we've got this other thing going on across the pond, and we've got to pay attention. We want to, you don't need to be a currency trader, but my goodness, you've got to at least have your third eye on what's going on inside that currency pair, because for that to turn, which it could do as we looked at, then you could see the FTSE turn, then you could also see the U.S. markets turn. Now, who is going to be first to the stable here? Well, let's go take a look at some intraday patterns and figure out what the markets are at least trying to do in working off some of this oversold condition, right? So we have things all set right now. Let's take a look at the 30-minute charts here for the and I'll come back maybe even a little bit later when we take a look at the probably go well the ESPN. We'll do that. Shoot, we'll do that. We'll do that here shortly. But first, let's start with a 30-minute chart here. Now we're going to switch over to my Ninja Trader charts out here, and here's a 30-minute chart. And what we can see last night, if you were paying attention to the screens, market open and move lower into about 8 o'clock in the evening. At 8 o'clock in the evening, formed a nice little hammer candle, also happened to be a doji candle. Tells you the market's getting tired, tell you had the bulls kind of rushing in out here. And the market went ahead and bounced. It bounced from the low. This is the NQ. It went from a low of 42.15. Gave you a valid turn signal. It got up into about 3:30 this morning, got up to 42.67. It was really trading the same way that some of Asia was as it was bouncing out here. Now we can see we have the same pattern in effect right now. Prices hit inside the NQ has hit its first resistance level. So we get back from this break. Let's go take a look at that. Let's look at some other time frames and anything else that you'd like me to look at. Be happy to do that. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we established during the first two segments out here that the importance of us paying attention to, the presumption is that we need to pay attention to what's going on over in the UK because of the impact that it has in the U.S. markets. We've taken a look at monthly, weekly, daily charts for the FTSE. We've taken a look at charts for the Great British Pound. And then we began taking a look at some charts for the ES Mini. Now, before we go take it back into the intraday charts out here, the intraday chart that I have on my screen, the top portion happens to be the S&P 500 futures contract. And at the bottom portion of the screen out here happens to be the current light sweet crude contract. And so we just want to establish, is there still this correlation, directional correlation going on between the two? That's important to take a look at. And as we look at this, remember I mentioned last night we saw a nice little hammer candle that formed at about 8 o'clock inside of the NQ. That took place also inside the ES Mini. It's kind of hard to see on the screen up here. We see where my cursor's at, but that's a hammer candle. You see it when we punch open the next chart out here. And you can also see as it was making its low then, so too was light sweet crude. And light sweet crude did what? Light sweet crude bounced and actually made a intra-session high between 3 and 3:30. The exact same high that came with the ES Mini, that came with the Dow futures, that came with the NASDAQ out there. So I ask you, is it important to be paying attention to this? The answer is yes. Now, in the case of light sweet crude, an area to be paying attention to, right? We established that the pound could be near a support level. It's not exactly right there, but it could be near a support level. And the same time that that is taking place, while we're seeing the market pull back, we are seeing light sweet crude get down to the price point of 45.66. Why is 45.66 so important? Because that happens to be the bottom of a weekly TAS market profile. That level should act as support. Those people who are buyers are sitting on that fence. I have no idea whether they're going to get steamrolled. They could get steamrolled, but that is an area that you want to pay attention to. We're trading right now at 45.95, and the number is just about 30 cents below that at 45.66. If that level holds as support, then what price ought to do is bounce from there. If it bounces from there, what do you think the chances are that the ES, that the NQ, that other markets would also bounce too? Something to think about. Likewise, if that level fails, that spells trouble. It spells double trouble. If we go try to figure out what that trouble might be, if we take a look at light sweet crude contract rate at 45.95 right now, the problem here with light sweet crude is let's put the profiles up on our screen first. So let's do that. Give me a moment to add those in here. That way you'll see them here. So you can see that. You can see that. Let me get rid of that diagonal line, that trend line out here. We'll put that back. So we can see that that is the only saving grace. Well, one of the saving graces for light sweet crude. If it busts through there, and good question, where is light sweet crude likely to trade to? What would be the next level? That's where that trend line was at, right? So if we take a look at the trend line, that would say somewhere right in the vicinity of 43, 44, somewhere right around there. Now, that's the trend line, right, that was established back at the bottom back on January 20th. So the area here for light sweet crude, if it fails at this level, what we would anticipate is we would see the market continue to move lower, the futures market continue to move lower, the FTSE would have no reason to do anything other than move lower. Of course, it would be trying to take its real take on what the pound is doing out here. So let's watch. We're coming really close to a level of support. Is it moving down with a wide-ish ranging bar? Yeah, it's not how you like to see price come into support, but we just have to watch that price area. So we're getting very close. And then so the trend line just becomes our next target area. We can then take a look at retracements and so forth. Let's just leave it there with regard to that rising trend line inside of light sweet crude. Now, back to the ES Mini. I know we were taking a look at the NQ, but I'm going to switch over here to the ES Mini. We can go back and forth between them. You can also see, interestingly enough, we saw that nice little Gartley cell pattern, right? We talked about that on Friday. You might say, what's a Gartley cell pattern? Here's your A to B equals CD. It's a lightning bolt. It's an A to B equals CD pattern that forms in this case here, after a significant move. This was a significant move to the downside off of Brexit Thursday night, Brexit Friday morning, right? Makes I'll call a perfect 1-to-1 A to B equals CD. To the upside, it was close to a 0.618 retracement. Bottom line was it was a Gartley sell pattern. Now, Gartley sell patterns that we've also talked about, have five different outcomes. And we're beyond outcome number 4, which was making 100% move, which was just simply getting back to the lows of Thursday night inside of the ES Mini. However, the one thing that gets in the way and here's the other pattern, by the way. So the first 4 patterns are retracements, either 0.382, 618, 786, or that 100% move, getting back to the swing point out here. The other pattern out here is the A to B equals CD to the downside. We can give you a price projection of that. That says, so if Lightspeed Crew breaks through that its support level out here, your anticipated price move inside the ES Mini ought to be 1944, somewhere right around those vicinities out here. That's your A to B equals CD. However, when you're busting through a swing point, the one thing that can get in the way, and the question you have to ask yourself is, are you doing it with conviction? Because if you're not doing with conviction, such as we have on our screen out here, prices moving lower with less relative energy out there, that's when you want to be waiting and paying attention to the signs of the bulls out here. Well, the signs of the bulls, right, just simply a bullish reversal signal. That happens in this case here off of that Gartley sell pattern, right, the high of that Gartley sell pattern, coming in at 11:30 this morning. Now, at 11:30 this morning, makes a nice little piercing candle. On a scale of 1 to 10, it's probably a 2 with regard to reliability, 2 to 3 maybe reliability of identifying a turn. That next candle, though, was important because it was additional follow-through, so that increases the likelihood. We can see that the TAS market profile on this 30-minute chart, I don't know why that's doing that here, but we can see it's because of something I'm doing. We can see that TAS 30-minute market profile really lined up to give us more of a bias to the buyers out here. So, and it was a 7th wave move. So it really makes it pretty easy. You start to see a move down below 1981.50. The markets continue moving lower, probably continue moving lower in through the close out there. So 1981.50 inside the ES Mini is the price level that you want to be watching. But at this stage of the game, it's doing everything that it can to at least work off a little bit of that oversold condition. Will it? I don't know. Back to the daily chart, there was a question out there about the 1999 level. If we take a look at it, let's look at the ES Mini. What you're going to see out here is you're going to see a number of bullish reversal signals. You've got a nice little hammer candle down here from May 19th. Once that level was broken, I'll put a horizontal line across it, down the low of it. You know the expression, if you're long, you're wrong. That was not a good scene out here. So what does that say? That says that is your resistance area. Now, overnight, we saw the ES Mini go ahead and bounce, right? Take a look at the low of that session. It's 20. When I say that session, the hammer candle, the low of the hammer candle, old support, right? Just to show you how it becomes new resistance. 2022 was the number. If we go take a look at the actual price point that the ES got to, let me put the 30-minute chart up here. So we'll come, this is at the session at 3:30, and the actual high was 2022 and 2 ticks out there. So that becomes a significant resistance level for you to be watching with regard to what is the ES Mini trying to communicate to you. Because should for any reason price get above that level, that changes the game. Otherwise, price wants to head lower because on a daily chart, it's broken its levels of support. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. A couple questions coming in during the break here. The first question was, okay, in order for the market to confirm some type of bounce, what would be the number that you would want to pay attention to? Well, we took a look at that. So we took a look at that hammer candle, right? So really, it is that hammer. I'll give you an intraday one to take a look at as well. But the real key is going to be, can price get back above that old support level, which is now resistance 2022? That's the number to be focused on, because the question that came in by email didn't really reference time frames out there. So it's so much more helpful if you can reference a time frame for me. Then that way I'd throw it up. For example, I'm going to throw up a 2-hour time frame chart out here, and in order for the bounce to really get underway, and the number that I'm going to give you is going to change, okay, but it's a really important number. It's that little red line out here that's on Stevie's screen, and right now that number's at 2,000, and we'll call it 1 or 2 ticks out there. We'll say 2,000.50. But as the market keeps moving lower, so will that number as well. But not until that area of resistance gets cleared would you have any kind of confirmation that the market really wants to try to work off that oversold condition. It's going to do it. The question is when, and we don't really have the signal. We got intraday signals, right? It's no different than really what the Great British Pound is doing. And as we took a look at it, here's a Great British Pound. We can see that it too was moving lower, right, up until about the 11:30 time frame. It was making the same type of pattern that the NQ, the ES, the YM, that they were all making in the same time frame. And it too is trying to bounce out here. So that's one of the reasons that we really want to be paying attention to it. We're getting good signals here from light sweet crude, good signals from the Great British Pound as far as what it wants to do. Another question that came in was, if I would take a look at Goldilocks out here, Nugget specifically. So let's go take a look at the NUGT and see what it is communicating to us right now. So we can see that, on the nice push higher in gold on Friday, and we don't have any kind of bullish reversal signal or bearish reversal signal. Let me get the volume out here. It opened and just sold lower all the rest of the day out there. So what does that mean? Let's take a look at the volume. There's a swing point out here that NUGT that Nugget was testing. We really ought to take a look at the GDX out here, but we're going to take a look at Nugget as we speak. So the swing point it was testing, we have a failure on price. Do we have a failure on volume? I don't know. The swing point at 7.5 million shares. On Friday, that volume was 8.3 million shares. Did we have a failure on price and volume? The answer, no. We only had a failure on price. When you have a failure on price and not volume, what does that say? That says you're going to go back up and you're going to test a swing point. Well, guess what? That's exactly what Nugget has done today, although it's still trading inside that swing point. The volume today, so it's going into what you're taking your measurement on. You could use a Friday session, but let's make it a more difficult test for the Nugget in order to give us a piece of information. Use the volume of 7.5 million. Right now, you're at 4.8. I don't know. I don't think I have it. Let's see if I can do this real quickly here. So you're at 4.8 million. Go over to this chart. So 4.8. And we've been trading for about 4 hours and a quarter, right? So about 4.25. That says volume of about 7 million shares. So 7 million, it's a 7.3 maybe versus 7.5. So as long as NUGT continues to trade inside between 109.15 and 123.96, it would suggest that you're going to go try to test that high again, 123.96. If today you were to see it close below 109.15 and you were to see it with less than 7.5 million shares today, now you'd have a rejection of that swing point with light volume. And what does that say? Well, now you've got a bunch of different support levels to consider. You've got a weekly TAS market profile high that until you see it close below 102.13 says that could be support. 95.37, that could be support. If those levels were to fail, you'd see price move down to $72. I'd say that would be the target to the downside. But you don't have that as any type of confirming signal as we speak right now. So that is on NUGT. If I switch over to GDX here real quickly, I'm sure it is the same thing volume-wise. So you had volume here on the trading session with the swing point of June 16th with 124 million shares. That was tested with 142 million shares. However, today is really light volume. Okay, so I'm glad that I did that for you. So let's take a look at the one-time ETF out here and really see what its message is. So volume today inside is 45.5 million shares, and that says you're going to do about 69. So that's 69 going against, 124 from the trading session of June 16th. That's the swing point it's testing. It is rejecting as long as it closes below 2703. Then you've got the because this is how you really would take a look at it. You see, the trading session of June 16th was tested with volume on Friday, right? 142 million shares, but it failed on price because it closed back below it. That says price is going to be up there. It's going to test it. That's what it's done today because intra-session it has gotten above 2703. But today it's doing it with lighter volume. And here are the profiles that I would say are more important than what shows up in NUGT. Because now if you were to see it close below, and I would do it like this. I would make it more difficult. I would say you've got to get out of this swing point from the trading session of June 16th. So you need to see this before you would start to say, hey, what's going on with my mining trades out here? You really need to see it close below 25.41 to start to get that sphincter muscle maybe to tighten up a bit. So that's take a look at the GDX and the Nugget out there. No reason really for us to take a look at gold or silver. We've kind of done it by just taking a look at the ETF structures out here. All right, so we got the Dow down 289 right now. S&P is off 39. Did I get everything? I think that I did, but if not, or inside the Tiger's Den, if you need me to take a quick peek at something, please just send me a message, post a message in there. Let's take a look at Priceline. Let's go take a look at some volume out here, see what Priceline is doing. It's had some big days to the downside. Friday, big volume to the downside. Today, it's done about 1.1 million shares. So what is this doing? This is coming all the way back into an area where it had broken out on the trading session of February 17th. It broke out with 2.3 million shares out here. You're trading with inside that gap. You've got 1.1 million shares, so it's light volume. It is testing its TAS weekly profile high. If 1164 fails to hold that support, you ought to see Priceline at least come down and tag the level of 1115.84. Any close below that says you probably run all the way back down to the lows in February. And that is on Priceline, PCLN. Also moving down, let's take a look at BlackRock. BlackRock probably going to be similar to the S&P 500, but let's take a look at it anyways. This is below all of its profiles out here. At this stage, I think that what we would be looking for is nothing more than retracement levels to try to identify where is the next level that BlackRock, ticker symbol BLK, is headed to. Of course, what I need is the retracement, not the expansion. Fibonacci numbers out here. So now let's do it again. And it says 314.46 should be next up in the case of ticker symbol BLK, BlackRock. If that doesn't hold, you're looking at 299.55. And if we can do that, it can make a run for the February lows out there. Also moving to the downside, let's see, what do we have? Ryanair. Let's go take a look at Ryanair, RYAAY. Big volume the last 2 days out here. What's the deal? What's the news out here? Intention to return capital to shareholders by way of a share buyback program to be conducted by, okay, so they're doing a share buyback program, but that doesn't matter. This is, Ryanair is, it's Irish in the UK. Thank you, David. That makes a whole lot of sense. In any event, that is trading down with volume. It's headed back, it's almost there to where it broke out back in 2014, in December 2014. We'll be right back, folks.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's go ahead and end the show here by taking a look at some individual stocks that are actually moving to the upside out here today. Let's take a look at Public Storage, PSA. We'll do a public service announcement out here. Let's go see what this is doing. Let me get the volume back up on the chart out here. So the volume today inside of Public Storage is 788,000 shares out here. Looks like it's trying to break its most recent downtrend line out here. That was started from back on this little bearish engulfing key reversal session back on April the 13th. So that is likely where it's headed to. A few more dollars to the upside around the 253.58 level out here. Let me turn on the profile boxes out here, see what that says. Says if it can break the trend line, there's a brand new weekly profile that established itself today. Says if it can break that trend line, Public Storage is going to try to make a run for the 264.10 area. Right now, currently trading at 250.20. Also moving here to the upside, we've got Suffolk Bank Corp, SCNB. What do we have here to receive? Oh, that's a buyout. Let's not spend any time on that. GW Pharmaceuticals, GWPH, up about 6%. Big volume. What's going on here? Oh, they have a positive phase 3 trial. It did really move higher on some big volume, but has moved into a swing point or testing a swing point with volume, which from June 3rd, it's failed on price at this stage, but says that it'll be back up there to test that area. That area, by the way, is somewhere between the price point of 91.80 to 97.98. GWPH is the ticker symbol there. Let's look at Apple, see what Apple is doing, trading 91.73 out here. 91.73. Apple is now pulled back into its weekly TAS market profile. If this level fails to act as support, it doesn't have that much further to go ahead and test the most recent swing point low at 89.47. Volume today, 29 million shares. The bottom of that weekly profile is 91.76. You're trading at 91.76. So I would say it's certainly testing it as we speak. The volume on that swing is 76 million shares. Apple is pulling back on light volume. Something to think about. Still trading with inside that swing point. You need to see a rejection of that swing, which would mean a close above 92.78 out there. Otherwise, it's down to support. Doesn't mean that it can't move lower or test the low of that swing point out there. That's what I'd be watching for inside of Apple. What else would we want to look at out here with the next minute to go? I'll tell you what, we'll just go back to the FTSE. Let's just do this here. I'll show you something on a monthly chart. And this is where we'll get a huge amount of information. I do mean huge. Take a look at a monthly chart. I don't think I've seen a monthly chart that has this many hammer candles, over the period of about, this was from October 2014, over a couple-year period of time. And if you take a look at the ones that we're going to focus on right now, happen to be the old back-to-back. Yeah, that's like two back-to-back walk-off homers out here. And that is the trading month of January, this year, 2016, and February out here. So what we know is that the area of the price point in January, the low there, 56.39, big level of support. In February, that low was 54.99. Huge levels of support out here inside of the FTSE. So no wonder when you take a look at the FTSE as it ended the week last week, even with everything that was going on, kind of no wonder, look at this, that it still formed a bullish reversal signal out here. Now, that alone doesn't mean that, hey, it's out of the woods. The FTSE has been trading lower ever since May of 2015. It's still in a downtrend. It needs that great British pound to find some legs out there, folks. Otherwise, that'll continue moving south. Stay tuned. Our man David White's going to be up next. After that, we've got the Tom O'Brien Show from 3 to 5. Have a great Monday. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.